Good morning, everybody. This is Nigel Hawkes, Hawkeye Traders. It's May the 2nd, which is a Monday. It's a bank holiday in Europe today, so I thought I'd take this opportunity to do my video as I'm holding a workshop in Tunbridge Wells in England for the next 2 days. If you are attending, I look forward to meeting you, and I hope it'll be a very informative couple of days. What I want to show you now is a question I get asked a lot. How do I set up my charts? And the caption heading of the video is "Trade against the overall trend as your peril." So this is how I set them up. I have the long-term tick chart down the bottom. This will tell me what my overall market direction for the day is, and it will also tell me the expectations for my trend runs. So for example, here I set it up on the 3912 off the gearbox, which I have to tell you has been a revelation as far as my own personal trading is concerned in setting the tick times every day. My medium term, the 1956, and my slow, the 978. The whole day you can see that the market on the slow tick, on my slow time frame, was in uptrend. It had congestion here, but the bias was still up to the upside. Even though that the heat map went dark red, it just only told me that two of the trends had clicked out to the upside and had gone short. But the overall market, you can see that the volume was still green, and my stops and my barrier were underneath the market. So my slow time frame, and I set my trend to conservative, which is 2.25 standard deviation over 20 bars, is still holding me to the long side. I then come to my gear changer, which tells me which of these two time frames to look at in conjunction with this time frame. So here I am sitting here, and I can see that I'm in the orange, so I'm looking for this time frame in conjunction with this time frame. Am I interested in a long? Yes. Am I interested in this short that's come into the market here on the fast time frame? Not at all. Why? Because this one is still long. My slow time frame is telling me the overall market direction. My middle term chart, although it's coming down, it hasn't gone short. I'm still not interested. And now it goes long. There is my entry. There was the low risk. I keep saying to everybody time and time again, to be a successful trader, you need three things. One is an edge. I believe Hawkeye gives that to you. Two is to be able to control risk, which is money management. There are lots of fine books out there on money management. And thirdly, to control your emotions. Controlling your emotions and controlling risk are fundamental. The risk here to take this short means that I'm going against what the overall slow trend is doing. The medium trend has gone in congestion. If I do want to take that one, I'm just looking for a very short amount of trend run, and then it comes up and gets back into this long trend here, and I'm off to the races again. And you must look at this time and time again. Let me just go to the swing chart. The swing chart, which is the 220-minute on the ES, has been working brilliantly. If you look at what the daily is doing, the daily is in uptrend. Every time this comes down, buy the dips, this comes down, buy the dips. You know, you get the buy coming in here, you can take it up to there. The trend dots start rolling over, that hit a profit target. Look at the trend dots in this trend run up here. They're going straight up. There's no hesitation in this market at all. This market is going up. All the pundits are saying it's going down. And if we go and have a quick look at silver, silver is very interesting, and it's given us a classic. If you remember last week, I said that this was not a sell-off, although if you looked at it and you were a Wyckoff trader, you would have said that was a sales climax. There was not enough volume that went into that move. It's now been tested. It's gone up. We've now had the volume radar on silver come in. The lighter blue dot here is showing us ultra low volume. Markets don't like ultra low volume. It shows hesitation. It's come off, and bang, the markets drop down in the pre-market. So Please always look, and I'll just go through this and show you my setups. Again, here's the Russell. You know, I like looking at them. You've got to have the slow time frame at the bottom. You've got to say, okay, what is the risk? Now, well, here is a great example. You can see that the slow time frame has come in here. We're already got these trends clicked in here to the downside. Could you have taken those up here? Well, you had red volume that came in. You've got an isolated high, Hawkeye pivot high there, Hawkeye pivot high there, pushing it down. The risk is low risk because you know that after pivot highs you get 3, 5, 7 bar reversals. The reversals are in, pushing this down, and now the market comes back, and now you get the buyers coming in, and now you can see that the heat map on the long term has gone. Yeah, you can get in. Okay, you're late off the fast one, but you're not interested in that. Here is the one that you're interested, and you can see that the trends here come in, and you could have had that. So good trading this week. I will be in the trading room on Friday. Randy's running his room every day, so do register for that. I believe it's another free week this week, so you can see him in action, and good luck.